It's Monday, November 30th. I'm your host, Jason Moser, and on this week's financial show, we're going to talk some recent crypto-related news from some of our payments companies, including PayPal and Square. We're going to check in on Matt's recent Retail's Not Dead basket as we prepare to enter a new year with a vaccine on the horizon. We've got a listener question regarding a small cap bank, and we'll wrap it up with one to watch. Joining me this week, he's back after taking last week off. For some pretty good reasons, too, I might add. Mr. Matt Frankel. Matt, good to see you, man. Hope you had a nice Thanksgiving.
Oh, good to see you. It's been I took some time off last week. It's easier for us to get away on weekdays because, little kids in school. So, then whoever's watching them just has to drop them off. So sorry to miss you, but it was a nice, much needed rest. And now I'm back and ready to go.
Well, yeah, it sounded like I said, it sounded like a very good reason. So very understandable. Glad that you and your wife were able to get away. And hey, folks, listen, you celebrated an anniversary. So, hey, you get a chance, throw them a little love on Twitter. Tell them happy anniversary. But Matt, let's talk first and foremost this week, PayPal and Square. A couple of companies we always enjoy talking about. Members love them. Listeners love them for a lot of obvious reasons. PayPal CEO Dan Schulman, Square CEO Jack Dorsey, they've been very clear about their belief that they see cryptocurrencies playing a role in the world to some degree. So we've seen some news out from both companies recently in regard to Bitcoin and cryptocurrencies. Let's talk a little bit about the latest. What's the latest with what these companies are doing?
Well, so Square's isn't exactly new news. What they recently bought $50 million of Bitcoin for their own balance sheet as more of an investment on their own. But just before we get into PayPal's news, just let me give you some context of how important Bitcoin is that Square has jumped into it. In the third quarter alone, over $1.6 billion of Bitcoin went through Square's network, meaning Cash App customers bought and sold that much. That is 11 times as much as it was a year ago. Remember, Square's been doing this for 2 years. So that's a pretty big surge in popularity. That 1.6 million made Square $32 million of gross profit, which isn't a great margin, but it's not bad. I mean, that's a needle mover.
Well, and that's Bitcoin trading back and forth, right? That's just individuals trading Bitcoin back and forth, right?
Correct. That's Cash App users, to be specific, right. Buying and selling. One interesting thing I saw a hedge fund called Pantera Capital estimates that since Square launched 2 years ago, they now account for 40% of Bitcoin volume in the U.S.
Holy cow.
40% from Square. So I know I'm much more of a Square fan than a PayPal fan, but being honest, PayPal is the bigger company. So this is why I wanted to say this first, because PayPal's news could be even more significant. On October 21st, I believe it was, PayPal announced that it was going to launch the ability for its users to buy, sell, and hold Bitcoin, similar to what Square allows its Cash App users to do. But the real detail that's important is in the same press release, they said that they have plans to make Bitcoin and cryptocurrency usable as a payment method to PayPal's 26 million merchants. That could be huge for the currency. Right now, you can't go to any merchant with a Square terminal and pay with Bitcoin without doing some intermediate step like getting a debit card or something like that. So this could be a huge kind of needle mover for mainstream adoption of cryptocurrency. I don't necessarily see it as a mainstream big revenue source for PayPal, but for cryptocurrency as an industry, it could be a game changer.
Well, yeah, and to your point, we talk a lot about needle movers and how companies may introduce some sort of functionality or capability. Maybe it's not a big needle mover, but ultimately what it does is it creates engagement, right? It keeps people within that universe using their products and services. And I can certainly see where that would be maybe the point of focus in the near term for companies like Square and PayPal, getting that functionality in there. To me, it feels like a very easy bet. Doesn't feel like there's really any downside as long as you understand the space. But it also feels like there are challenges for crypto, at least in the near term, and you mentioned it, in regard to mainstream adoption. Now, maybe that clears up. Maybe as time passes, maybe that adoption as a medium of exchange, maybe that becomes a little bit more commonplace. I don't see a big reason today why I need to go to the store and pay for something with Bitcoin. It just, it doesn't seem like there's any real advantage. But I mean, given what we know today, given the small steps these companies are taking, it feels like maybe that mainstream adoption right now doesn't even matter.
Well, as far as mainstream adoption as a currency, there's two use cases. There's adoption as a currency and kind of as a store of value. So as a currency, I see three main obstacles to really mainstream adoption of Bitcoin. One, it's very volatile. You don't want to buy a type of currency that could be worth twice or half as much in a week. And if you don't think Bitcoin could do that, look at some of the charts from the past few years. Bitcoin can, go up or down by a few $1,000s in a week. So that's another thing. You don't want the volatility scares people away. Number two, there are too many cryptocurrencies, and it's easy to make a new one. So when I was checking just before we were on the show, there are over 4,100 active cryptocurrencies right now. I mean, most of them aren't big, but there are a lot of big ones. There's over 10 that have $1 billion market cap or higher. There's a lot of cryptocurrencies out there, and it's pretty easy for institutions, if they want to make their own. So, I mean, the idea of Bitcoin at first was one central currency, but if there's 4,000 of them floating around, it's not really that, it defeats the purpose. And number three, as you mentioned, it's easy. There are some really easy ways to pay with US dollars right now.
Sure.
I mean, with a lot of these fintech innovations, I tap my wallet on a card reader at some places now, and I can make a payment. I mean, US dollars aren't that tough to use anymore.
No.
So in my mind, for Bitcoin to get mainstream acceptance, it needs to do something that you can't do with dollars, which I get that there's a lot of use case for international money transfer and stuff like that.
Yeah.
But between volatility and the fact that there's literally thousands of them, and the innovations in dollar-based fintech, I really can't make the mainstream use case myself. But apparently a lot of people disagree because, Bitcoin, there's $359 billion worth of Bitcoin out there right now, and it's not over $19,000 a piece. And so apparently some people agree and are buying it. But.
Well, yeah, I mean, it could be argued certainly that there's a lot of speculation in that market. I'd be willing to bet that a lot of people that are speculating in that market don't really understand exactly how it works. I mean, I can't sit there and say that I fully understand how it all works. My basic understanding is, though, that there's a fixed amount. Right? I mean, there's a fixed amount of Bitcoin. So if you have something that is limited in supply, that obviously will make a difference in something like dollars, for example, as we've seen, not limited in supply, Matt. They can kind of just print them off of.
That's the big argument for Bitcoin being a store of value, in that it's essentially inflation proof in that sense. U.S. dollars, the government can always print more of them, which they do pretty regularly. Yeah. And with Bitcoin, that's not the case. There's a finite amount. So as a store of value, it can make sense. But if that's the big use case, then who cares if you can use it at PayPal's merchants if it's just a store of value? So Bitcoin really needs to, in my mind, decide which way it's going to go. And I mean, like I said, I can't make a use case for owning Bitcoin as a store of value over gold right now, and I can't make a case of using it as a payment over US dollars. So that's just me.
Yeah. Fascinating market. And we'll talk a little bit more about digital currency later on in the show as we jump into the listener question. But first, let's talk a little bit about something we've talked about a lot this year, and something specifically we've talked about in regard to an article that you've written, some companies that you've really been focused on here. We've been talking a lot about the retail space, particularly the physical retail space, bricks and mortar, places where people have to actually go physically. It didn't seem like 2020 was setting up to be all that good of a year for a lot of these retail concepts. Things have started to maybe turn a corner a little bit. We've got some interesting data here over the weekend in regard to Black Friday. Traffic at stores on Black Friday fell by 52.1% compared with last year. Now that is coupled with online spending on Black Friday surging 21.6% to reach a record high. And I think actually we're going to see today, Cyber Monday, I think is going to turn out to be the biggest digital sales day ever. We'll have to wait and see how those numbers actually shake out. But given everything that we know, we've seen at least we've seen some signs of life here in the retail space, and retail isn't dead. Let's talk a little bit about the retail isn't dead basket and the specific companies that you've been talking about here this past year.
Yeah, and the thing to mention first is that none of these are e-commerce. The whole point is that one, in a post-pandemic world, people are going to shop at stores again. There's going to be demand for going out. E-commerce, even right now, even in the pandemic, makes up about 16% of all retail sales. This is according to the Census Bureau. So there's still most retail sales take place in person still. That's going to be the case after the pandemic. The percentage of e-commerce will continue to tick up, but physical retail is not going anywhere, despite what people may think. So there's going to be room for quality retailers after this is over. So I made this basket and we did a show about it called the Retail Isn't Dead basket. Jason has all his baskets, so I wanted one. So these are 5 real estate investment trusts that all are somewhat involved in retail, that I personally own all 5 of them. I feel like I can never chime in on Jason's War on Cash basket because I don't own all 4. This is a basket that I'm putting my money where my mouth is.
You don't own PayPal, right? That's the only one of the 4?
I don't own Visa or MasterCard.
Oh, Matt, you're killing me. We got to
See,
change
there you
this.
go. Now I'm out of that conversation forever.
Now I'm going to reel you further into the conversation so that you just feel compelled to buy them. But that's for another week.
Let me ask you, do you own any of my retail REITs?
I don't own any of them, unfortunately. It's not a space that I tend to look for a whole heck of a lot of exposure. Now, with that said, I tell you, you make a very compelling argument. So I want you to continue on, please, because I know our listeners will love it.
Okay, so there's 5 companies in the basket, and I'll go through and briefly give you like a 1-second description of or 1-sentence description of what they do. You have Simon Property Group, ticker symbol is SPG. They are the largest mall REIT in the country. They own 7 of the 10 most valuable malls in America. They invest in the Class A malls. They're big time malls. These are the high-end properties. You have Tanger Factory Outlets, which is ticker symbol SKT. They are the only pure play outlet shopping REIT in the market. The big open air outlet shopping attractions. They're mainly in touristy areas. I know Jason's from South Carolina. There's one in Myrtle Beach that I know of, and Charleston has one. So then number 3 is the Realty Income Corporation, which I'd call that kind of the backbone of the basket. They're a stock that their ticker symbol is O. They do well in pretty much any type of economic environment. Even in the pandemic, most of their tenants are essential businesses, so they've held up really well. 4th is EPR Properties. They call themselves the Experiential REIT. I know a lot of people will roll their eyes when I say this, but about almost half of their properties are movie theaters. They also own Topgolf is a big tenant of theirs. They have water parks in their portfolio. They have ski resorts. Vail Resorts is a big tenant of theirs. So they're experiential properties, which service businesses are a form of retail. Restaurants are a type of retail business. Anything that sells a service is usually a type of retail. And 5th, last but not least in my mind, is Seritage Growth Properties, which is a REIT that Warren Buffett wholeheartedly believes in. He's actually their biggest individual shareholder. Him himself, not Berkshire Hathaway.
He knows a few things.
And he knows a thing or two. This is a REIT that was created specifically to buy a portfolio of old Sears properties to renovate and turn them into things other than Sears. Because, even Sears didn't want to own Sears. That's why they created Seritage. So they are gradually developing this portfolio to premier retail centers. Because if you remember, when Sears were built in back in the day, they were some of the most premier shopping destinations in town. They're in great locations for the most part. Rundown buildings, but in great locations. So, the theory is that if you turn those into great retail assets, then you'll have premier assets in premier locations, and it's a winning combination. So those are the 5. Since I put out that article in June, a lot has happened, obviously. When we first started the Retail Isn't Dead basket, it looked like we were going to reopen with no problems in June. That's when that big second wave hit. So the big second wave hit right after I put out this article and made me look like an idiot.
Just bad timing. That's all.
It was bad timing.
Yeah.
But since then, we've had the vaccine news has come out as positive. People are starting to realize that these companies aren't going bankrupt. They're all in good financial positions now. Since that time, the S&P is up by 22%. So put that in context. So the market's done pretty well. So that's been a driving force too. Just running through some of these numbers, Simon is up by 44% since that time. On the heels of good vaccine news, they modified their merger agreement with Taubman Centers, if you remember, at a cheaper price than they were originally going to get. So they acquired one of their biggest competitors for a pandemic price, which is a good thing. Tanger Outlets is up by 47%. They recently said that traffic through their properties, not necessarily sales at their retailers, but traffic through their properties is up 99% of last year's levels. That's pretty impressive for a retail REIT right now. And the holiday shopping season is a great time for outlets historically. And Tanger's in a good position because their properties are outdoors for the most part. They're very conducive to social distancing. It's not the crowded mall atmosphere. You can get your own space, ventilation, things like that. So people are more comfortable going, and the numbers are showing that. They also have a ton of cash on hand to make not only make it through the tough times, but to pursue opportunities as they come up. Which outlet shopping is still a pretty small industry, so they have some room to grow. Realty Income, which is, if you're going to buy one of them, that would be the one I would say, just because they're, like I said, they own mostly essential businesses. Dollar stores are a big part of their portfolio. Drug stores like CVS and Walgreens are big tenants of theirs. Convenience stores, warehouse clubs. Anyone who's been to a Costco lately knows that they're not hurting.
Nope.
In my time, in Colombia anyway, that's the only place you can find toilet paper right now, by the way.
Oh no, are we getting back to the days of hoarding toilet paper?
Mr. Moser hasn't been to a store lately. Yeah, they're all out.
Well, I mean, I tell you what, I started thinking about that maybe a couple of months ago, and I mentioned something to my wife, and I said I'm going to go ahead and order 2 big boxes from Amazon because I just don't trust that people won't start freaking out again and just taking all that stuff off the shelves.
That's why the stores are out, because it's all at Jason's house.
Now I'm gonna resell it. And what is that, war profiteering?
Costco's done a great job of keeping items like that in stock, which is why they've been doing great. Realty Income's only up by 8% since I wrote that, just because they weren't beaten down that much in the first place.
Probably a little bit of a stronger competitive position, it sounds like, from the very get-go.
Right. So they were in a good position going into this. They do have some movie theaters, but not a ton. For the most part, their properties are doing really well. EPR properties, their properties are not doing well, but that stock is up 20% since I wrote that. They successfully modified their lease with AMC, their biggest tenant, in a mutually beneficial way. It gives AMC a much-needed break on rent and locks them into longer lease terms, so the properties will stay occupied longer. So that's mutually beneficial for both.
I got a question for you on EPR real quick. Just
Sure.
A question for listeners, too. I know EPR paid a monthly dividend, and they suspended that dividend for the time being. Still paying the preferred dividend, I see. Now, when a REIT, in any position, when a REIT suspends their dividend, what does that do? Is there a time frame in which they have to reinstitute that dividend in order to be able to keep that REIT status, or is it something where if they maintain the preferred, then they still maintain that REIT status?
Well, the preferred dividends they generally have to maintain, or they accumulate and have to be paid in arrears at the end. With your common dividend, it depends on your profits. Specifically, REITs have to pay out 90% of their taxable net income. So if a REIT doesn't have taxable net income, which EPR doesn't right now, surprisingly, EPR was profitable in the third quarter. That came as a shock to me, and I follow the company pretty closely. But a company that's half movie theaters was profitable, but barely. I think they made like 4 cents a share. The dividends they paid out in like January and February will cover their obligation for the year. But in 2021, let's say they have $1 per share of taxable income for the year, they would have to pay out at least 90 cents a share in dividends. So it has to do with if they're profitable. There's no time limit if they're not profitable. Seritage, the next one I'm going to talk about, they stopped paying their dividend well before the pandemic, and they're not a profitable REIT right now because they're focused on development. So they don't have to pay a dividend until they are profitable. So interesting arrangement.
Very indeed.
So EPR is up 20%. Favorable arrangements with their movie theaters. I know when they had first reopened a lot of their properties, they said Topgolf traffic was actually up year over year because
That's
people just wanted to
believable.
get the heck out of their house.
That's believable.
Um, I mean, when the pandemic ended, or not when the pandemic ended, when the lockdowns ended, I should say, and things were allowed to reopen in early summer, people just wanted to get out, and those are the type of places they wanted to go.
The
And now,
driving range right down the street from our house here, it is constantly slammed. I mean, 2 stories. It's owned by Fairfax County, but it is a very very busy at all times of the day.
right? I mean, their properties are getting affected now with the new surge of COVID cases. Some places are doing lockdowns again, things like that. But a lot of their properties are this is their slow time anyway, like water parks. No one's going to go to a water park right now.
Nope.
The ski resorts are doing fine because they're conducive to socially distancing and things like that. Top Golfs, they're pretty much an outdoor golf attraction. They're not going to get that much business right now anyway. So as long as their movie theater clients or tenants are able to make it through the tough times, they'll be fine. And they have over $1 billion in cash. It's worth mentioning and are only burning. They're not burning through much at all. Like I said, they're profitable now, so they're doing pretty well. I mean, that's in my mind one of the best bargains in real estate at the moment. And then finally, Seritage. Seritage has more than doubled off the lows. Like I said, up 65% since it was already up in June for the reopening. Seritage, the biggest question is, do they have money to make it through? Unlike all the other ones I mentioned, they do not have billions of dollars on their balance, or big credit facilities or things like that. They rely on their rental income and income from some asset sales to fund their operations. And in the start of the pandemic, everyone thought, oh, no one's going to buy any retail properties anymore, so they won't be able to sell anything. Their tenants aren't paying rent. But now it turns out that wasn't the case, and they have a nice little buffer, so that's why they're nicely up. As long as they have the money to redevelop their properties, there's a ton of value creation potential. But like I said, they're the least liquid of any of the five REITs I mentioned. But overall, I mean, looking at the returns, 3 out of the 5 are over 40% up year since I made the basket. I'm satisfied with that. It's not the war on cash basket by any means yet. I'm not claiming the title.
There is no title. There is no title. We're just doing our thing, man. We're just doing our thing. Well, Matt, thanks for the update on that. We really do appreciate it. I know all listeners do too. Moving on, we got a question from a listener recently, Matt. Ben on Twitter asks, "Hi, Jason. Any chance for an industry-focused episode on Silvergate Capital? It's a bank that has a platform for cryptocurrency called the Silvergate Exchange Network, the SEN, with a lot of institutional transactions. Thanks. You and Matt make financial discussion interesting." And I will say he concluded that you and Matt make financial discussion interesting with the laugh face, right? With the little tears of laughter. So I mean, maybe that's an LOL. I mean, listen, it was very very thoughtful sentiment, and it sounds like we're at least doing our job well enough. So let's keep on doing what we're doing, Matt. But Ben, really, thank you for the question. It's not a company that I've never really dug into Silvergate before. I'd heard of it. I mean, a very small bank, of course, but not too small. I mean, it's just a small cap bank, but an interesting one nonetheless. And in looking a little bit more into the Silvergate Exchange Network, particularly in this age of digital currency, it seems like this is a bank that might become a little bit more relevant as time goes on. What do you think about Silvergate, Matt?
Yeah, so they're not, like you said, they're not a very big bank. They're big enough that we're allowed to talk about them, but not much more than that.
Yeah, and around a $600 million market cap, right? Something like that.
The Silvergate Exchange Network, which is the most interesting part of the business right now, I was reading that it's a intermediary that kind of it facilitates the transfer of money from one cryptocurrency player to another. That sounded interesting enough, but then I started reading their list of customers, and Coinbase is one of their customers, Gemini is one of their customers. So the use case is that normally if a customer buys Bitcoin in US dollars, because when you buy Bitcoin, you use money, the exchange would have to transfer that somewhere, and then it takes a couple of days, then it would get transferred to another exchange to buy crypto or something like that. So what the Silvergate exchange does is it facilitates this kind of a 24/7 real-time money transfers between cryptocurrency exchanges and major hedge funds and other digital currency players. There's mining operations that are customers of the bank. So it's an interesting case. They have over $2 billion of cryptocurrency deposits. So most of their deposits are in cryptocurrency, not, US dollars, which is an interesting case.
Yeah, and you square that up to Square's balance sheet with 50 million in Bitcoin. I mean, that can give you at least some context there as to how big of a role crypto is playing for a company like this.
Yeah, this wasn't always a crypto bank. They've been around for on their website it says they've been profitable for 21 years. So they've been around for at least that long. They pivoted to crypto. Their CEO's been there since 2008. They pivoted to crypto in 2013, which good timing. They were first to the party. It sounds like that's how they were able. Coinbase, Gemini, those are some of the biggest players in the industry that are their customers that they use for their money transfers. So it's an interesting industry right now. It's worth mentioning that as a bank, there are two sides to the business. There's deposits and lending. So pretty much the exchange network and the crypto deposits, that's the deposit side. On the lending side, they're a mortgage lender. So that's kind of an interesting. It looks most of their assets are either mortgage-backed securities or what are called warehouse mortgages, meaning the lines of credit to mortgage brokers. So they're a mortgage lender, so their loan portfolio is actually pretty high quality. I saw that their non-performing loan rate is 0.16% right now, which is really low if you look at some of the other banks right now. So it's interesting. That's how they make their money, a combination of income from their lending portfolio, which is mostly mortgages on the commercial nature. So commercial mortgages, and they make fee income from their cryptocurrency activity. An interesting bank. This is not investing in Bank of America or even one of the smaller, more tech-focused banks like we've talked about on the show. This is kind of it's a play on the cryptocurrency industry.
Yeah, yeah.
The more money that flows through cryptocurrency exchanges, the more they're going to make.
And I think you summed it up nicely there. I mean, if you look at the way the stock has performed here year to date, it was more or less tracking the market up towards October, but starting in October, shortly after they had released their quarterly results, the stock just went. I mean, as they like to say, parabolic, man. Just went straight up. In year to date, the stock has returned about 125% versus the market's close to 12 or something. So clearly, Silvergate having a very good year, and I can understand, at least when you're looking through the transcript from the most recent quarter. Customers completed over $36 billion in Silvergate Exchange network transfers during the third quarter alone. Now, that exceeded $32 billion that was done all throughout 2019 together. So clearly, that Silvergate Exchange network is gaining a lot of traction, and maybe that's the enthusiasm there. I mean, I certainly understand it based on your description of how the company makes its money. I will reiterate, this is a small bank. I mean, a $600 million market cap roundabout. Also worth noting that it has a very low float. I mean, there's a low number of shares outstanding, just under 19 million, it looks like. Half of that essentially is the float on the open market. So my point is, anytime you see a small cap bank like that with a low float, you're typically going to see some hefty bid and ask spreads, right? And you're going to see some pretty volatile movement from time to time. It's all to say, if it's a bank that you're interested in, I mean, this is the kind of bank where I think a limit order probably makes a lot more sense if you're interested in owning it.
Yeah, for sure. I mean, I would tiptoe into this one if you were interested in it. I prefer it to owning actual Bitcoin as an investment.
Yeah, I was wondering about that actually.
Like that mortgage side of the business should provide nice, steady income. And then the fee income side of the business is the growth avenue. So, it's like a nice combination of steady, predictable, recurring revenue and growth potential. So, but like I said, I like it better than investing in actual cryptocurrency. But this is not Bank of America or JP Morgan Chase. So I'd be tiptoeing cautiously.
Makes sense. Well, Ben, thanks for the question. We appreciate it. Matt, before we wrap things up this week, let's give our listeners one to watch. What's the stock that you'll be watching this coming week?
I am watching Slack Technologies. I just slacked with Jason before this this broadcast. Slack it's not necessarily confirmed yet, but it's essentially reported that they are going to be bought out by Salesforce. The latest rumblings is that it's going to be about half cash, half stock. I'm curious to see the exact terms. The unnamed source that spoke this morning said that it would be higher than the current price, which I'm wondering if that means now or before the merger rumblings. Because I'm a Slack shareholder, so
Okay.
and then once the actual terms are announced, you have to decide whether you want to be a Salesforce shareholder or if you want to head for the exits. So it's going to be an interesting dynamic. I think an acquisition by Salesforce will do wonders for Slack as a platform and make it a much more valuable platform. It'll help it compete with Microsoft a lot more on the workplace collaboration front. So that's what I'm watching this week. What do you have your eye on?
Yeah, so I'm going to be keeping my eye on LivePerson, ticker LPSN. And LivePerson, some of you may remember, the technology enables consumers and businesses to connect through mobile messaging, and it ultimately helps integrate chat and messaging functions into a seamless experience. So whether you're using Facebook or Amazon or WhatsApp or whatever it may be, they're really helping consumers and businesses connect in a more seamless fashion from start to finish. But we're going to have actually next week, Matt, and I know you know this, we'll be having the founder and CEO of LivePerson, Rob LoCascio, back on the show next Monday. And he's going to talk about an interesting new relationship that LivePerson has formed with Bella, Bella. This is a new digital banking startup which actually launches today. And LivePerson has partnered with Bella to use its technology to connect with consumers. And so if you look at the general idea of what Bella is based on, and bringing LivePerson's technology into the fold there, I think it's going to be a really fun conversation to have. Looking forward to speaking with Rob next week, and that'll be the interview for next Monday's show. And so, definitely looking forward to having Rob back on, talking more about what they're doing at LivePerson, what he sees the future as with Bella, and the future of banking in general. So that'll be my one to watch for the coming week. But Matt, I think that's going to do it for us this week. Listen, man, I'm glad that you were able to take last week off, get a little time out with your wife, and relax. But hey, I'm really glad to have you back too. So thanks for spending the time with us this week.
Of course. I guess I will see you in 2 weeks.
Yes, you will. And remember, folks, you can always reach out to us on Twitter at MF Industry Focus, or drop us an email at industryfocus@fool.com. As always, people on the program may have interest in the stocks they talk about, and the Motley Fool may have formal recommendations for or against, so don't buy or sell stocks based solely on what you hear. Thanks, as always, to Tim Sparks for putting the show together for us. For Matt Frankel, I'm Jason Moser. Thanks for listening, and we'll see you next week.